Welcome back, Rogers TV. We're here with Sam McDadi, brokerage owner and realtor. So along with his MBA, Sam has an extensive 25 years in the real estate industry. Him and his team have grossed over $32 billion in sales over the course of his illustrious career. Thank you for being here with us today, Sam.
It's my pleasure. Thank you for having me.
So our viewers range from first-time homeowners, multiple homeowners, landlords, etc. And so I'm just going to ask you a broad range of questions just to give our viewers as much value as we can in this segment here. All right, so what advice would you be giving homeowners? What pitfalls should they be looking out for?
If you're a seller today, there's been never a better time to sell a house. The market prices it's red hot, and I think it's well documented in the media. So it's time to maybe think about making a move if you've contemplated that, because we're seeing record prices. Year over year, we've seen as much as 20 to 25% appreciation over the last year, which is really unprecedented. So I think it's a great time to think about selling. If you're a buyer, I'd be a little bit more guarded, because you're seeing a lot of people get caught up in the bidding war frenzy, and just make sure that you don't get caught up in that and pay excessive dollars where maybe a year down the road you might regret overpaying. So I think you have to be guarded as a buyer, because inventory is excessively tight today.
Okay, interesting, yeah. Do you see this trend continuing in the near future, the next few years, with home prices continuing to appreciate the 10?
You know, over the last 15, 20 years, we've seen slow and steady growth, which has been sustainable. You know, currently with the growth we're seeing, I don't think you can continue to see 20, 25% growth. And I think there will be a normalization in the market where supply and demand level off. And I think once you see more product come in the marketplace, you'll see a healthier equilibrium.
Okay, awesome. And where do you think home buyers would find the most value for their money today and looking forward in the future? Like particular pockets, any areas?
You know, what's really attractive, what I think is getting a lot of traction today, is the mid-price range. And ironically, mid-price range today means, you know, 6, 7, 800,000. That's a really red-hot number. Right. Anything under $1 million, which if you asked me 10 years ago, that would have seemed like a very high number. But today, prices have really gone up a lot. So there's a lot of demand in that segment of the market. You know, when you think about low rates, foreign money coming into the marketplace, you know, those are all acting as a catalyst. Where we're seeing it take a little longer is if you're in the, you know, multi-million-dollar price segment. If you're $2, $3, $4 million, the buyer pool tends to shrink a little bit. So I think as a buyer, if you're into that mid-price range, you'll see good continuous growth in the long run as well.
Right. Okay. Perfect. And what factors should you be looking for when you're looking to purchase a home? What in the surrounding area?
I think it's the old adage, location, 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 right? If you're buying in a good location, you can never go wrong. And, you know, of course, you know, sometimes people have certain preferences. Being close distance to schools is important to them, amenities, etc. But neighborhoods, you know, I think are always the key factor in determining, you know, how you'll perform in the long run. So location, 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 I think has always been an adage we subscribe to as well.
Right, perfect, okay. And in terms of selling the home, how should a seller prepare to get the maximum value out of their property?
Well, yeah, that's a great question. And I think because the market's so strong today, some sellers have the belief that they can just enter the marketplace without doing their due diligence and proper legwork prior to going to market. And I think that's a mistake. You know, for example, our team, we provide, you know, full-time staging, you know, a pre-inspection before a house goes to market. So preparation to make sure you present the house in the best possible light is paramount, because people are visual creatures. They buy emotionally. So if you create the right template for success, that goes a long way. Good negotiating skills are important. Proper exposure, all of the above kind of translate into good success.
Right, okay, perfect. And in terms of buying, just because it is a seller's market right now, sometimes in certain areas and pockets, they require a clean offer, so one without any conditions, no financing condition, there's no home inspection. What would you advise, I guess, if you're a buyer? In terms of things like that?
If they are in a competitive environment, that it is important to probably go condition-free. So, you know, if that's the case, what you want to do prior to that is maybe pre-inspect the house before the offering date, so that you know the house checks out from a structural integrity perspective. Make sure your financing's in order so that you can go in clean, and even one step further, bring a bank draft with you at the time of offering, so you could show you're really serious. At the time of completion, you actually have a bank draft to solidify the deal. You know, one thing you have to be guarded about today is that if you overpay excessively from based on what the asking price is or what the market prices in the area are dictating, that you have to make sure the bank appraises the right level. Because if they don't, then you're going to have to make up the difference versus the appraised value. So if you're going in there strong and maybe paying above market value, you have to have a little bit of a contingency, i.e. extra funds, should the appraisal come in below what you paid for it. So.
Oh, I see that. That's a very good point. Do you see that happening a lot now, where the bidding war drives the prices up so high that the bank doesn't appraise the home high enough for
interestingly, not as much as we would have expected, because in some instances we're seeing properties sell for $200,000 or $300,000 over asking, and in some instances it looks like those numbers aren't really a reflection of market value, but yet they're closing, they're getting funded. So either the buyers have excessive funds to put towards a differential, or the banks maybe are seeing the trend and just appraising it at the value that they're paying. And today it's so hard to determine market value because it's a moving target.
Right.
A year ago, when they're going up slow and steady, you could put a price on it pretty precisely. Today that's not necessarily the case.
Right. Interesting. Okay. And in terms of buying and looking for value, I guess the main suburban areas, they're much higher priced than, I guess, the outskirts. If we're looking areas such as Ajax, things like that, home prices are much more reasonable there. And what would you suggest, I guess, buyers look to the outskirts, or would you buy more towards the hotter areas in terms of appreciation and value?
Well, another great question, and I think it's really case by case. So some buyers want to be close to the workplace, and if you start venturing too far out, then maybe from a commute perspective it doesn't make sense. But what we have seen, which is really unusual now, is even the 905 area codes, Mississauga, Oakville, Burlington, Hamilton, they're all being the benefactors of the low supply quotient, and they're getting a lot of multiple offers. So every area, so because pricing has become it's become difficult to enter the marketplace. People are moving outward,
right.
And that's kind of caught up where you're seeing multiple offers, even in Hamilton, where before traditionally that was an area that you wouldn't see that so much, right? So,
right.
It's just I think it's spread across, right?
Okay, perfect, thank you. And what advice would you give for first-time home buyers?
It's a difficult period today because for first-time buyers, because they're entering the market for the first time. If you're a second-time buyer, you're selling your property at a high price and probably buying at a high price, so you're trading off, right? As a first-time buyer, I mean, you're getting in, I think you have to be guarded because you can get caught up in the frenzy, and I think you just want to make sure you make good informed decisions. Don't over-leverage yourself because rates are low today. If there's a period where rates go up, you could see yourself paying a higher mortgage payment, and right. Life's too short. You want to make sure you balance that, and so don't get worried. At some point, the market's going to normalize. You don't have to jump in today. Make a good informed decision.
Right. Okay. And in terms of that, would you recommend maybe some buyers to wait until next year if they don't have a strong enough down payment, if they're only looking to put down 5, 6, 7%?
It's a good question. I was on BNN a few weeks back, and we were talking about those same questions. And the problem is the government might step in at some point and make it more difficult to get into the marketplace because they're worried about the Vancouver and Toronto marketplace.
Right.
So if they raise the down payment requirement as a first-time buyer, you're already struggling to have your 5 or 10%. All of a sudden if it goes up, we don't know what they're kind of proposing, then it's going to be even more difficult. And I wish we had a crystal ball, because maybe next year the market's going to be even stronger. It's hard to call that, right? I mean, at some point, everything does run in cycles, but when that cycle kind of matures, it's hard to say.
Okay, awesome. And then for all of our landlords out there, people looking to purchase rental properties, what things should they look for a good rental property in terms of house structure, location, etc.?
Once again, location, but do your homework in terms of knowing what rents you can achieve in the marketplace, how long of a turnaround time it'll take to obtain a good tenant. And the operative word from a landlord-tenant perspective is finding a good tenant, right? So even if you take a little bit less of a rent, but you have a good stable tenant with good income, good credit, then your investments can be protected and you're not going to have to be a very involved landlord. Because we've been doing the rental business as long as we've been in the business, and we've seen all the ebbs and flows, right? So, today our key criteria is to get a good quality tenant, and from there everything moves smoothly.
Okay, perfect. And I also know you have a book. Do you want to tell us a little bit about that and how our viewers can get their hands on your book?
Sure. It's in its 10th edition. It's called Making Sense of Real Estate. If you email me at sam@mcdadi.com, I'd be happy to give anybody a complimentary copy of the book as well.
Oh, that's awesome. Thank you so much, Sam.
It's a pleasure seeing you again, Mitchell.
Awesome.
Thank you.
Talk to you soon.
Thank
have
you.
a great one.
Thank
you
you
very much, Sam. Bye. And thank you once again to Sam, and we look forward to chatting with you later in our future episodes. And that is all the time we have for today's segment. A big thanks to Sam for sharing his time and experience with us. I look forward to all of your email questions. have a topic or a question you'd like answered on the show, contact me anytime at mitch@smartmoney.ca. That's mitch@smrtmoney.ca. Thank you to all of our viewers, and see you next time on Rogers TV's Smart Money.